What the fuck is up, baby? Welcome to PDI Part 2. Long awaited PDI Part 2. Yes, it came out before GTA 6. Let's freaking go. All right. Starting off with, basic knowledge, right? Let's give a quick overview for everyone, right? What is PDI? PDI stands for pre-distribution inversion, and it's going to be followed by three things: an accumulation zone, a manipulation, and a distribution leg. Everyone's heard of AMD, but what makes PDI different is that you're able to catch the distribution leg before it happens through an inverse of a fair value gap, through an IFVG. All right? So this is just like a little doodle, let's call it, right, to say the least. And so let's get into it. First thing I wanted to talk about is time and price. This is actually one of the most commonly asked things I get when we're, taking PDIs. You'll hear us say all the time, time and price, time and price. We want it to align here. And so let's go over it. So very often what you'll see when an accumulation happens is that it's going to be forming towards the end of an hourly candle, right? Before an hourly candle closes and a new hourly candle opens. Same thing with 4 hour, right? But let's just say hourly for now. And so as this happens, right, we're approaching the end of an hourly candle. Volume starts to die out, and we start to accumulate and generate liquidity, right? And so this liquidity can be seen in multiple forms, right? Let's say we're talking about this accumulation zone right here. You can see something as simple as just like a clean buy side level, which we anticipate should be taken. We can see it as something like maybe equal highs. There's like equal highs right here. Maybe we can see it as like equal highs that should be taken. Or maybe we can just see it as something like, there's this low resistance liquidity here, which we think should be taken. Doesn't matter what it is. Liquidity is liquidity. And what happens when you accumulate is that you generate liquidity on both sides, right? But what you want to see now is time align with the way you want price to move. And so what that means is, let's say we're feeling bearish, or let's say we don't even know what our bias is yet, right? We're approaching a new hourly open. We're waiting for 1 p.m. to open, and we don't know how to feel. And so we've been accumulating for a while. And so now what we want to pay attention to is, how does 1 p.m. open? Which liquidity is it going to seek? Is it going to seek the buy side, or is it going to seek the sell side? And which is it going to leave for us to target? And so this you'll see happen very, very often, whether that's we start accumulating from 9:30 to 10 a.m. and then 10 a.m. opens up and we get a manipulation move up happen. And so in this case, right, we're going to go over like a open high low close. And so as you can see, let's say this is 12:30 to 12:50. We're accumulating and just generating this liquidity. In this case, we'll say we're generating this buy side liquidity right here, this low resistance liquidity. And 1 p.m. opens up. At 1 p.m., it opens up and it immediately manipulates up. And what happens? It takes this low resistance liquidity, right? It takes it. And so when we manipulate up, immediately at 1 p.m. open, we're assuming, okay, this is a potential open high low close. And the way we can confirm it is if after we manipulate, we get an inversion of a bullish fair value gap that we create within this leg, and then we deliver to the downside. And so an open high low close, what is this going to look like? It's going to look like this. So you can anticipate that, right, before this 1 p.m. candle open, we were accumulating. And now what we're doing, 1 p.m. opens and we manipulate up, and we're going to be creating this wick. We're going to be creating the wick of the higher time frame candle. And so this is going to be the wick right here. And so we don't know for a fact if this is going to keep running bullish or if it's going to be bearish. But one way we can anticipate that this is a proper open high low close is through an inversion of a fair value gap. And so let's say after we manipulate up and we take out this low resistance liquidity or these equal highs or this buy side, whatever the fuck it is, we get a inversion of this bullish fair value gap that we create in the manipulation move up. So now this bullish fair value gap becomes a bearish fair value gap. Becomes an inverse fair value gap. And there's literally nothing left for us to invalidate on the way down, right? Let's say there's no other fair value gaps in the leg. We inverse the only fair value gap there is. Now we have enough confirmation for us to assume that this is an open high low close and that this PDI has time and price aligned with it, and it is very high confluence. And so the good thing about a PDI that has time and price aligned with it is that obviously if this is going to be the wick of an hourly candle, then this move, this distribution leg is going to be fucking huge. You know what I'm saying? It's not just going to be towards accumulation zone lows right here. It's most likely going to run really low and you're going to be able to catch a big move, which is why it's so nice to have these PDIs happen at the end of an hourly candle, right? The accumulation is happening towards 12:50, like, and then at 1 p.m. opens, you're probably going to catch a huge fucking move. So you can see the same thing in a bullish sense right here, right? We're chopping up. 1 p.m. opens up. We immediately manipulate down. We take out some sort of liquidity here on the sell side. And let me just like mark out a little line. And so we can assume that after taking out the sell side and creating a bearish fair value gap, if we inverse this, where is there left for price to go? Nowhere but up, right? And so that's exactly what we're looking for when I say time and price to align with a PDI. And yeah, like that's pretty much most of it for time and price. I feel like that's a pretty decent general understanding, right? This manipulation right here is going to be the same thing as this wick of the higher time frame candle. Same thing with this manipulation here is going to be this wick. And so that's how you can put something like time and price with PDI, open high low close, open low high close. And these scenarios are going to allow you to catch really big moves. So hopefully that makes sense. All right, now let's go over what makes a good manipulation. If you keep getting manipulated by your ex, you're going to keep getting manipulated by the markets, my friend. Anyways, next thing I want to go over is what is and isn't a PDI. Because I'll have you guys always ask me like, yo, Pat, is this PDI? Is this PDI? And a lot of the times you are right, but there are times where you're getting manipulated into thinking it's actually a PDI. It's not the real manipulation move. So let's go over it. So this is a very common occurrence I see people thinking is a PDI. And it's while you're still in the chop, an inverse fair value gap will form within the chop, and you think that that's the PDI. No, your best bet, especially if no sell side has been taken, if you're just chopping and you get an inversion of a fair value gap, that is not your PDI. So don't think that that is your PDI, because you're probably going to just get chopped out, and it's that you're still in the accumulation phase. Wait for a breakout in either direction. So this is not a PDI. This scenario is not a valid PDI. It is not a valid PDI. What happens here is that you start chopping up, and then sell side gets taken, right? This accumulation zone low gets taken, and then you form an inverse fair value gap, and then you catch a move to the upside. This is not a valid PDI. It is, for the most part, a pretty valid inversion setup, a pretty common one, to say the least. Because you still have this resting liquidity up here, but it is not a PDI, so just know that. Because a lot of the times what you'll see is that it will start to chop. One candle will wick out all these lows, sweep this liquidity, and then a inverse fair value gap will form. And I wouldn't say, like, there are better inversion setups. For the most part, this is a pretty valid one, but I wouldn't say it is like the greatest inversion setup. So that is certainly not a PDI. Just because you swept the lows doesn't mean that's the manipulation move. The real manipulation move will be a real manipulation move. Like, you will know when it's manipulation. Now let's go over this one. This is a bad fucking this is not a PDI, but this is you getting fucked over. And a lot of the times you guys we'll see an accumulation phase, and then you'll see a fair value gap get inverse, but already sweep. In the process of inversing, it is sweeping this internal high right here. And so often what you guys think is, oh, this inverse fair value gap is still going to be valid despite the fact that the inverse it closed past these highs. And so a lot of times you guys will either take an entry here or wait for the price to come down into it and then just get demolished, right? Price just runs lower. So just know this is just kind of general reference, because you need to know really how inversions work if you're going to be trading PDI. You don't want to be entering after internal high gets taken. You're going to just have to wait for a sell side level to get taken again, and then get your move. This is PDI. All right, accumulation zone, clear breakout out of the accumulation zone, manipulation right here in the manipulation leg. We get a bearish fair value gap. We come up, we invalidate this bearish fair value gap. We enter often validation of it or the retest, however you want. And boom, it's a beauty. It's a beauty. Ain't she a beauty? Yes, she is. A lot of the times you guys ask me, hey, Pat, should I wait for, a retest or just take it, market order it? It's up to you. Usually I'll market order it 90% of the time, right? I'll at least do like half my position market order, as long as I have enough risk to reward towards the internal high. And then if it retests, I'll add to my position. That's one way to go about it. Or I'll just full send it at here. If the risk is way too bad, because let's say the inversion happens like up here in the manipulation leg. Let's say the inversion happens up here. You're probably not getting a 1-to-1, but this would still be definitely a market order. I'm not gonna lie. Yeah, because you still inverse this for value gap clean. You're still gonna market order this and just not take a partial until you get to a 1-to-1, and you're just gonna break even at internal high take. This could all be, in relation to vice versa. Like if this was a bearish sense, we're speaking bullish sense here. But let's say the inversion happened. Let's say the fair value gap you want to see get inverse is this one all the way down here. But the inversion happens, up here. And so let's say the inversion happens right here. So we want to see two things, right? You typically don't want to take this trade if the inversion happened all the way down here, because your stop loss is going to be so close to your inversion, right? Like this is just bad. You can easily get wicked out of this. So you would wait for price to come down, tap into some sort of PD array that's going to give you better risk to reward, right? It doesn't have to be the inverse fair value gap, but maybe another PD array, knowing that you have this inverse fair value gap as a line of defense as well. But just giving you better risk to reward. You don't want to take an inversion if the candle inverses, all the way up here, and you're just gonna get dog shit risk to reward. So that pretty much sums up what is and isn't a PDI. So when you want to identify whether something is a good manipulation or a bad manipulation, there's two things you really want to look for. You want to see where are we trading within a leg and what are we tapping into. So let's go over here what we have on the left side. So we're accumulating, right? And now we get a manipulation. But where are we manipulating to? How do we know if this is a manipulation and it's not just going to be a continuation of a run higher, right? Well, you don't know, but you can anticipate. And so how can we anticipate? By looking at what's to our left. Let's looking at the things that are around us. What is happening around us? So if we look here to the left, right, we have this dump, whatever. And after a dump or a pump, what happens very often is price starts accumulating, right? You had this high volatility move kick in with high volume, and now low volatility, we're chopping up, generating some liquidity, and now price is going to manipulate in either direction, all right? Well, we don't know if it's going to manipulate or not, but this is one way you can tell. So in this case, we manipulate up, right? We start going up. And so what is telling us that this could be a valid manipulation move? Well, let's see. For one, the easiest thing here that we can determine is that we rebalance the range, right? This is equilibrium. We rebalance the range. We tapped into equilibrium. So now we can start anticipating, okay, it would be like justifiable to short because this range has already been rebalanced, right? Let's say, and we took out, let's say this buy side level right here, this intermediate high, whatever. Or let's say we ran even higher, towards OT of the range or something. Doesn't matter. Let's just keep it simple and say we rebalance the range, we hit equilibrium. And now after that happens, we start seeing some sort of rejection, right? Price starts to come down. But how do we know, what the fuck? How do we know that this is a retracement? And how do we know that this is a, now a reversal and not just like a retracement and we continue to run higher? Well, let's see, right? Is this leg filled with plenty of bullish fair value gaps that we can still be respecting? If the answer is no, and it's just one fair value gap like this, or, you know, maybe like one that's bigger, like 2 minute, 3 minute, 5 minute, whatever, or just a couple, then if those get inversed, there's no reason for us to run higher. For the sake of this video, let's keep it simple. Let's show you have this one fair value gap that you create in the process of manipulating up, right? Or let's even give like a slightly more realistic scenario. You have one big one and one fucking tiny one, because there's always a whimsical ass fair value gap hiding. But the second you see this manipulation start to come down now and invalidate both these fair value gaps here, and these turn into inverse fair value gaps, and we have nothing left to respect in the bullish sense, right? These were the only fair value gaps in this leg of the manipulation, and now all we have left to target is really, you know, this accumulation zone low, sell side level, and whatever's below it. But for the most part, we don't technically have a reason to run higher, because we rebalance this leg, right? We hit equilibrium. Let's say we took out this buy side level right here, whatever. But there's now, it's obviously a valid manipulation, because what happened was we had this huge dump, price started accumulating, and now price is going to quickly correct itself. It's going to correct, you know, this imbalance before it continues running lower, because never, well, sorry, not never, but, you know, when you have these dumps without corrections, eventually price is going to have to correct this. And so that's what we see happen here. And this is a good confirmation for a bearish PDI. And so you would take your short off these inversions, right? That's the whole point. It's called pre-distribution inversion. Put your stop loss at this high, or just anywhere where you have enough room for this inverse fair value gap to hold. And it should hit most of the time, right? Most of the time. Keyword most of the time. It's not going to hit every time, but most of the time it will hit. Let's look at this other scenario right here. You have this rip up, whatever. We get this move up. Price starts accumulating, right? There's our accumulation zone right here. And so what happens? We break out of this accumulation zone. And so in the process of breaking out of this accumulation zone, we tap into a bullish 15-minute fair value gap, which had been left unfilled. So there was this liquidity pool just sitting below this accumulation zone, waiting to get filled. All right, I don't know how to phrase it without making it sound weird. But yeah, that's really it. And so it's like, when price is accumulating, now it's going to look for a place to manipulate and correct some sort of imbalance, you know, target some sort of liquidity. And you can see this 15-minute rebalance the same way, right? We make this move up, price starts accumulating, and we leave this unfilled 15-minute below. And so we can expect price to break out of this accumulation zone, tap into this 15-minute, and get some sort of reaction. And so how do we know if this reaction is valid? Well, let's see. In the process of manipulating down, we create this bearish fair value gap. This bearish fair value gap ends up getting inversed after tapping into the 15-minute, and now we should have enough confirmation to long, right? Let's say there isn't like a 1 p.m. open, whatever. This is just in the middle of a session, right? In the middle of a session, it doesn't matter. This is still great confirmation. And so let's say you are feeling very bullish. You're gonna make this accumulation high your first TP. And you're going to let it run to whatever other targets there are, right? That's if you're feeling very bullish. If you're not, this is still a great fucking trade for at least a 1-to-1. And by no means should you not take this, right? Accumulation, manipulates down, taps into some 15-minute rebalance. Then you get an inversion to the upside, and bang. So this is like the general gist of what makes a good manipulation, right? You want to know, where are you trading within a range? When you break out of this range, what PD arrays are you hitting, right? What liquidity is being taken, okay? And like it's really, well, I don't want to say it's that simple, but you just have to look to your left. What happened before this accumulation zone? So I know where is the liquidity lying when we get some sort of manipulation, okay? And so that's that, right? There would be a case where this manipulation ends up happening to the downside, and that's totally fine too, because this leg is still left on not rebalanced, right? This leg is still a huge imbalance, and so let's say we end up manipulating down. This is a huge common occurrence as well. and we get a fair value gap to inverse right here. In the process of coming back up, we inverse a bearish fair value gap. This bearish fair value gap turns into an inverse fair value gap. There's nothing left for us to invalidate. We have this low resistance liquidity sitting below this large leg. And so same thing, we can just take a long, and now what can we target? We can target this, well, okay, so it happens down here, stop loss right here. Yeah, we can target this low resistance liquidity for a first target. And then you can target a rebalance of this range right here, of this leg, right? So you can take another TP at equilibrium. And so it doesn't matter what direction it happens in, but just be conscious of what's happening around you. And so the reason I showed the first example where the manipulation was towards the upside is because this would be a high confirmation bearish PDI, a manipulation, rebalancing a leg, tapping equilibrium, tapping OT of the range, whatever the fuck, and then getting your distribution. You're obviously going to get a very strong distribution down. So hopefully that made sense. I feel like that was a pretty decent explanation. But yeah, moving on.
Bro, I just want to get a fucking haircut and they bricked my shit, bro. Oh my god.
Lastly, a lot of you guys asked for like a tier list on PDI, but the thing is I can't really give you a tier list because it is so situational based and there's so many variables that can play in that just overall, improve a PDI. But, for the most part, I guess I could give you like two very good scenarios of PDI. This will give you a general understanding of like what makes a good trade, confluences you want to be looking out for, and just, things in general that are very high probability. So first one I got here, this is just like a very mechanical one, probably something you would see more often than others. And so this is just basically, you have your accumulation zone right here, you manipulate out of it, you leave equal highs in the process of manipulating down. There's equal highs within this accumulation zone. You get an inverse fair value gap. You enter, of course, this being your only fair value gap to inverse within this manipulation leg. You enter, these equal highs are 80% gonna hit, 90% gonna hit. And then you have just a very clear buy side level above that you should be taken, not really protected or anything. It's just very queer, very clear liquidity pool. Sorry. Then you have something like this. This to me is like a super ideal scenario, right? You have this move down, right? This very nice move down where you continue to generate just a bunch of buy side liquidity, and you start accumulating, and you break out of this accumulation. You leave some low resistance liquidity. You get an inverse fair value gap. You have this low resistance liquidity to target, which is also going to be right, right below like a 15-minute rebalance. I love these 15-minute rebalances with these PDIs. It's just going to be such high probability. So this is like a very strong scenario, right? You start chopping up, leaving some low resistance liquidity. You have a 15-minute unfilled fair value gap above or below, right? Depending on which direction you're trading this in. And yeah, it looks like it would appear that you're like in some sort of buy model. Dude, why do I always do that shit? You would determine that you're in a buy model, and like everything's really in line here. And so you'll often actually see these PDIs happen at the peak of a market maker buy model or a sell model, right? If this was like the other way around, like imagine it was like upside down, and like you're just going up, you're gonna start chopping around the top of like the sell model, and then price will come down. So these are just like ideal scenarios. I can't give you like a tier list really, because it's not just something that's so simply mechanical, because the PDI is also very like pattern based, very natural. Like it's more than just, okay, I TP here because that's the best like place to TP. Like it's very, very much based on like surroundings and shit. Like that's why you're able to catch such good moves with it. So I can't give you a direct tier list. Like this is A+, this is B. Like I can't. But for the most part, most PDIs are going to be B+ and above. That's the reality. At least if you're just targeting the accumulation zone, for sure. Something like this, like let's go over scenarios what would make this trade better, right? So this looks overall very, very like strong, mechanically very high probability. You have equal highs here, buy side level, but what would make this stronger? Okay, so let's go over it. Let's say when you manipulate down, you tap into a bullish 5-minute fair value gap. So now this manipulation move taps into a bullish 5-minute fair value gap. What happens within this fair value gap? You get an SMT, right? So let's say ES takes this low, but NQ doesn't. So now you have an SMT in this low. You're inside a 5-minute bullish fair value gap. That's where like the manipulation happens, and then you get obvious rejection and very strong signs of reversal, high confirmation PDI. So obviously I can't tell you. These are the exact things you should be looking out for because PDI itself is already really strong. Just the manipulation, accumulation with an inverse fair value gap, target accumulation highs or lows, that itself is very strong. But these are factors that would increase the probability so high. So I'm going to leave it at that. I think that's very good information for now. I'm going to leave just kind of whatever you still want to know up in the air. Like you guys can ask me after watching this video what you're still confused about, and I can touch on it more. But for the most part, I feel like I can't give you almost more sauce in this. This is very, very much just like as clear as it gets. I could always try to give you more. I think the reality is that PDI is PDI. It's a great fucking model. Almost all you guys use it, and you guys fucking love it for a reason because it's such high win rate. And I mean, even today, like, look at this shit. We fucking, right? We balled up today. I got break even, but I approached it wrong because why? I started getting a little bit emotional about this trade, right? We were failing to take this low multiple times, and I'm like, dude, what the fuck? So I end up partialing here near this low for at least a 1-to-1, about like a 1 to a 1.3-ish. But the reality is, if you've heard me watch the previous PDI video, it's that you don't partial until you take accumulation zone lows. And that's like the general consensus with PDI. And I made the mistake not to trust my model here, and I got punished. I got fucking break even, and then the real move happens. I would have hit fucking all TPs in one candle if I just, trusted my model. But notice the PDI right here, right? Super, super clean. We're accumulating. Volume is dying out. We leave this low, this accumulation zone low. We break out of this simultaneously taking data highs. So we take out a buy side level, kind of looks like this in the opposite direction. And we get an inverse fair value gap right here. We inverse it, we enter. Boom. It fucking cooks, right? This is beautiful, beautiful. Absolutely amazing. But yeah, I mean, I think this is really as much sauce as I can give you. I hope you enjoyed this video. I wanted to make it quick, but also incredibly informative. And yeah, I'll leave it at that. Much love, guys. I hope you watched this whole video, took some notes down, back test whatever you're uncertain about. And yeah, PDI to the moon, baby. PDI to the moon.